Hello, this is Rick Komarek, Certified Financial Planner, and today I'm going to be reviewing with you an article that I just uploaded to my blog called Midterm Elections, What Do They Mean for the Market? So let's go ahead and get started. It's almost election day. For those of us that may need a civics refresher, every 2 years, the full U.S. House of Representatives and 1/3 of the Senate are up for re-election. So while the outcomes of the election are uncertain, one thing we can count on is that there will be plenty of opinions and prognostications will be floated. And in financial circles, this will almost certainly lead to predictions on what will happen with the market. However, as long-term investors, should we be focused on these midterm elections? Let's take a look at that. We would caution investors against making short-term changes to a long-term plan to try and profit or avoid from losses from changes in the political winds. For contrast, it's helpful to think of markets as powerful information processing machine. The combined impact of millions of investors placing billions of dollars of trades each day results in prices that are set at the best expectation of a fair price. This makes outguessing market prices very difficult. While surprises can and do happen in elections, the surprises don't always lead to clear-cut outcomes for investors. Case in point, take the most recent presidential election in 2016, and there were a variety of opinions about how the markets would perform and who would be elected. Well, as we all know, it turns out that Trump was elected and the market closed higher. So many people thought he wouldn't be elected, and then many people thought that the market would close lower if he was. And of course, the exact opposite took place. What about congressional elections? Well, to take a look at that, I've got this chart here, and this shows all the monthly returns of the market from the 20s all the way to the current time. And then it also shows those months in which midterm elections occurred, and those are colored here in the chart. And essentially what you see is that they're scattered randomly throughout. In other words, there's no predictive power on what will happen depending on who gets elected. In addition to that, if we take a look at a longer term period, we can go ahead and look at this chart, which shows how the growth of a dollar changes over time. And what you see here is when Republicans, Democrat, or mixed control of Congress occurred. And what you see is that both parties have periods of significant growth and significant declines during their time of majority rule. There does not appear to be a pattern of stronger returns when any specific party is in control of Congress. So equity markets, they can help investors grow their assets, and we believe investing is a long-term endeavor. Trying to make investment decisions based on the outcome of elections is unlikely to result in a reliable excess return for investors. At best, any positive outcome on such a strategy will likely be the result of random luck. At worst, it can lead to a costly mistake. Therefore, there's a strong case for investors to rely on patience and portfolio structure rather than trying to outguess the market to pursue investment returns. If you have any questions about this, investing, retirement, or your financial plan, feel free to reach out to me anytime.